In this first module, we will discuss the purpose of a budget in the public sector. The purpose of a budget in the public sector is twofold. It tells the amount of money needed for a government to function, and it forces an individual or group of individuals to determine the amounts to provide for each function within the government or agency. Cite Minefield, page 1. By doing this, government becomes accountable to the citizens it serves. The specific functions of a budget allow for accountability, control, and planning. As seen in the PowerPoint slide 2, the budget then becomes the legal document upon which the organization must carry out its functions over the fiscal year. The fiscal year generally follows two sets of dates. For state governments and some local governments, it is July 1 through June 30. For the federal government and many local governments, the dates are October 1st through September 30th. In Florida, the state fiscal year runs from July 1st through June 30th for state functions and October 1st through September 30th for local government functions. All states require that budgets be balanced for all governments operating within the state, including the state itself. Budgets are generally written in one of three formats: line item, program, or performance. Agencies and governments in the state of Florida are required to use the line item budget. As noted in the PowerPoint presentation, the line item budget requires funds to be allocated to specific objects or cost. In Florida, these would be personnel, operating expenses, and capital outlay, i.e. equipment. Program budgets not used in Florida allow for the funding of specific programs within the organization. Performance budgets, also not used in Florida, are related to the funding of specific activities and the outcome of those activities. The monies government collects to fund its budgets is called revenues. The monies government spends from its budgets is called expenditures. Revenues are generally supplied through taxation. Our federal government and many state governments have income taxes. The state of Florida has no income tax and rather depends on state sales tax for its major revenue source. In some states, such as Maryland, counties depend in part on monies collected through the state income tax. In Florida, the major source of revenue at the county and city level is property tax. Now that the government has collected this money, it spends it, known as expenditures. The largest portion of expenditures in government go towards salaries for personnel, and those monies associated with salaries, i.e. retirement contributions, FICA contributions, medical insurance, unemployment insurance, etc. These account for 3/4 or 4/5 of the budget. The next largest expenditure is operating expenses, those things necessary to support the personnel and the organization's operations. This accounts for about 1/10 to 1/6 of the organization's budget. The next largest expenditure is capital outlay, equipment, which generally accounts for 1/20 of the organization's budget. Equipment in the state of Florida is defined as a single item having a life expectancy of a year or more and costing $1,000 or more. A patrol car would be a good example. Government must be accountable for the monies it requests and spends. In the state of Florida, this is mandated by the Florida Uniform Accounting Code for all levels of government and government agencies within the state. This includes how each agency with the state will requisition money, spend money, and be audited once a year for those procedures. The law regulating the accounting procedure is found in Florida State Statute 218. Please take a look at the Accounting Code Manual. Note the link provided in the course outline. Finally, let's take a look at the major differences between public and private budgets. The monies to operate public budgets come from taxpayers, i.e. mandatory taxes. Monies used to fund private companies are provided to the company voluntarily. One buys a product or purchases stock in the company. Public budgets are planned well in advance and do not allow for much flexibility, whereas private company budgets can change often and can allow for flexibility. The largest difference: society has little say outside the voting booth and public hearings on how government budgets will be spent. Society, on the other hand, has a large say regarding private budgets by simply not buying the company's goods or services.